Hello, welcome everyone. Today we're going to discuss Chapter 10, which is Current Liability and Payroll for using accounting principle 9 Canadian editions. And this owned by copyrights by John Wiley Plus. This is for the introduction accounting. Okay, so let's start this slide. Chapter 10, okay. There's a number of learning objective which is 1 to 5, which is account for current liabilities, account for unsettled liabilities. Number 2, determine payroll costs and record payroll transactions. Number 4, current liability section and prepare balance sheets. Number 5, calculate mandatory payroll deduction, which is Appendix 10A. Certain current liabilities include account payable, unearned revenues, operating line of credit and bank overdraft, short-term note payable, sales tax, property tax, as well as current maturity of long-term debt. Okay. Uncertain liabilities like provisions, contingencies. Okay. Well, for payroll will be employee payroll costs according to payroll, and internal control of payroll. Okay. Let's look at the next one. Financial statement presentations, which is one of the things that we're going to discuss, and then do a payroll deduction in terms of having thanks A, in terms of mandatory payroll deduction, and using payroll deduction table rate. So we're going to discuss it later. Layering objective 1. Okay, account for certain current liabilities. What are those? Obligations that are expected to be settled within 1 year of the balance sheet date or within a normal operating cycle. Require existence of present obligation. Certain liabilities have known amount, pay, due, and date. Account payable, often the largest current liabilities for current balance sheet. Example, entity company buy goods from supplier with agreement to pay a later date. Account payable trade usually due within 30 days. Okay, good example. I mentioned in a number of my video. Let's say I'm setting up a samosa shop. I'm gonna get some sugar and flours and salt from my suppliers, and I usually don't pay on cash. They're gonna distribute my supplies in a week, and then I'm gonna pay them less than 30 days. Example here, April 6, supply says $200 debit and account payable credit $500 to record purchase of supplies. Unearned revenue is payment received in advance. Payment received in advance when the customer order is placed, reported as a current liability. For example, August is 800 cash, 500,000 here. Unearned revenue is 500,000. The record sales 100,000 season ticket. This is mostly common during for sport events such as TFC, Maple Leaf, or Blue Jays in Canada, in Toronto here, okay? Also for concert. So under revenue, a company provides goods and performs service. Revenue is recognized as rising amount from under revenue to revenue. So as September 7, under revenue is 100,000, ticket revenue 100,000 credit to record hockey tickets revenue. So this is, I guess, it's Maple Leaf trade sales. In operating line of credit bank and overdraft, pre-authorized interest borrowing allow to company to borrow up to preset limit when needed. It may require collateral such as security, such as current asset, investment, or property, plant, and equipment used on a short-term basis. And it has a negative overdrawn cash. For balance is called bank indebtedness, or bank overdraft, or bank advances. Short-term note payable, obligation in the form of written promissory note, usually require borrower to pay interest, use instead of account payable, give lenders proof of obligation in case of legal action if needed, and to collect. Issued for buying period, if due within 1 year, the balance sheet date, classified as current liability. Cash is 100,000 here, book it on March 1, debit. Note payable credit is 100,000 to record issue for 4 months, 6% note to Casip Dumoulin. Interest is recorded in the period of loan is outstanding because every 3 years is this example, adjusting interest is required. Example, face value of the note 100,000 times interest rate 6%, term of 1 year to debit 12 is 1,000. The booking will be April 30th. Interest expense is 1,000, debit, interest payable 1,000 credit to interest to April 30th. Short-term note payable at maturity. Interest must be updated for 2 additional months. Also, maturity value of note plus interest must be repaid. July 1, interest expense is 1,000. Debit, interest payable, credit 1,000. To include interest for May and June. Number 1, note payable is 100,000 debit. Interest payable with 1,000 plus 1,000 will be 2,000 debit. Cash will be 100,000 plus 2,000 credit is 102. This is to record payment of cash popular, demand note, and accrued interest. Okay, in terms of sales tax, expressed as a percentage of sales tax price per goods are sold to customer, includes service tax GST, provincial tax PST, and homeowner sales tax GST and PST combined into call it HST. Remember, you like me, GST, when you collect, you also can offset it with the you want to pay. Remitted to government every monthly and quarterly or annually. Amount paid by customer or sales tax are not considered value, but accrued to sales tax payable. Property tax receipt tax bill paid for calendar year. Upon receipt of property tax bill, expense is recorded for the month they have passed. March 1, property expense 6,000 times 212, which is 1,000 here. Property tax payable is 1,000 to record property tax expense for January and for amount owing. Property tax, payment of tax bill, when pay expense recorded additional month that have passed, prepaid is set up for the remaining month, which is by 31st, property tax payable is 1,000, property tax expense at 1,500, prepaid property tax is 3,500, debit. So these are the things that you have in terms of tax. And then the cash 6,000 here, okay? This is to record property expense for March to May, and prepared for June to December. Okay, June and December here up to March here. Prepared is clear to expend at the end of the year. Current maturity of long-term debt, the portion of long-term debt that is due within the current year, amount not due within the current year is disclosed as a long-term liability. Note that adjusting is required to the current portion of long-term debt. The progression is recorded when the balance sheet is prepared. Okay, learning object number 2. The account for uncertain liabilities. Uncertain liability include the provision is already that exists but the amount and timing is uncertain. We owe someone but not sure how much, but when, even who. Okay, liability occurs when settlement of the liability is likely and the amount of liability can be reasonably estimated. Product warranties is a good example too. It is a promise made by seller to buyer to repair or replace product it is defective or does not perform as intended. A good example, I buy a laptop, HP 14 Pavilion. It has a 1-year warranty. If it doesn't work in 1 year, then it is going to be covered. But the problem is, warranty has a limit things. It does not cover like water damage. A good example in iPhone is the same story. They don't cover water damage. Warranty will lead to future cost replacement or repair of defective unit. Cost of warranty is estimated accurate based on prior expense under expense approach. Product warranties, estimated warranty cost number of units sold, which is 1,000. Estimated rate of defectiveness is 5%. Total defectiveness is 500. Average warranty cost will be 100. Total will be 50,000. So this one is based on estimated, okay, percentage. So in terms of booking, December 31st, warranty expense is 50,000. Debit, warranty liability is 50,000. Credit to accrue estimate warranty cost. Excuse me. December 31st, warranty liability is 30,000. Debit and prepare part of inventory waste payable 30,000. This is to honor the 300 warranty contacted in 2024 sales. So how are you going to book that? In the T-count warranty expense debit here, income statement, and warranty liability is going to estimate the 50,000 and the actual is 30,000. You have remaining 20,000. And then customer loyalty programs gift cards result in estimated liability not known if the rewards are redeemed. If redemptions are likely, it can be estimated based on background. Records your liability will be cash is 100,000. Debit sales will be 91,743 and the revenue loyalty program will be 8257. This is to record sales and revenue related to the loyalty programs. Okay, that's how you book things. Okay, so you need to learn how to book these things. Make sure you book it properly in the journal entry. Contingency. Contingency liability is possible obligation resulting from past event. Record liability under provision IFRS if both conditions are met. It is likely and probable under IFRS that an obligation exists. So IFRS is the current standard Canada adopted now. So you have to follow IFRS, guys. Make sure this is the new trend. Okay. IFRS stands for International Financial Reporting Standard. This is what I did for Intech for 1 year as a business consultant, and then as a Travels Canada, 2 years project. This is a 4 year project when I was there in Travels Canada. Amount can be reasonable estimated. Okay. If coverage loss is likely but cannot be reasonably estimated, no it is recorded, disclosed, if not in the statement. If condition is unlikely, still disclose if the event is substantial, otherwise not disclosed. Learning object number 3, determining payroll costs and record payroll transactions. Payroll, more than paying employees' salaries and wages, companies are required by law to have payroll records for each employee to quote and remit payroll deductions to respect federal provincial law. Okay, that's the law in Canada. The payroll is usually bi-weekly, okay, bi-weekly payment. In Asia and other part of the world, bi-monthly. In Japan, bi-monthly. In Singapore, Indonesia, Malaysia, is bi-monthly. But here in Canada, it's bi-weekly to receive your payment. Two types of payroll costs. Employee costs will be amount paid to employees, such as gross pay, and amount paid by the employees, which is payroll deduction. Okay, then we're going to into the detail what those deduction employee costs will be. Amount paid by employer on behalf of the employee, such as employee benefit. Total commission earned by employee will be consist of wages equal to hours worked times hourly rate pay, salaries based on the weekly, bi-weekly, monthly, and annual rate, bonuses, and commission. Mandatory different gross pay and amount received net pay, mandatory payroll deduction will be required by law, personal income tax of Canada, such as CPP and EI, which is employee insurance, and determined from payroll deduction period. What the payroll deduction will be for charitable causes, retirement, and other purposes should be authorized in writing by employees and do not result in payroll expenses to the employer. Employer payroll cost will be amount employees required to pay, which is required by the government here, CPP, which is matching employee contribution, and EI 1.4 times employee contribution, and workplace safety and health compensation, and additional employee benefits such as sick days, vacations, stat holidays, and post-employment benefit to retired employee. This must be benefit given to retired must be accrued. Recording payroll involves maintaining payroll records, record payroll expense and liability, paying the payroll, and filing the within payroll deduction. Payroll record is separate. Earning record is kept for each employee. Payroll register may be used as a gross earning and deduction net pay by employee for each period. Employee payroll cost, entry for employee portion of payroll, the company expense is equal to the total gross pay. Employee payroll deduction become a current liability and the company is remitted. Example here, June 28, salary expense 34,420 debited, and here are the lists of the credit CPP payable 1875, EI payable 489, income tax payable, United Way payable, Union Dues payable, salaries payable. These are the total to record payroll for the week ending June 28. Employee payroll cost. Recorded when payroll is journalized, become current liabilities to company until remitted June 28. Employee benefit expense will be 4294 debit, and the remaining CPP, EI, workers' compensation, working payable to record employee cost on June 28 payroll. Okay, the most popular payroll company will be Ceridian. That's one number one, and ADP. Excuse me. You're having a sore throat here couple of weeks. Payment period is either by check or EFT. June 28 is salaries payable, which is 24,693 debit, and cash to record payment payroll, which is 24,693. And then the entry record payment and record payroll deduction will be like this. This gives you a detail. June to July 15 here. CPP payable gives you detail here. 3750 EI payable, income tax payable, United payable, Union Dues payable, workers' compensation payable. All is debit set, and then cash credited. This is to record payment of payroll deduction in June 28 payroll. Again, remember guys, I mentioned this in Canada. The payroll payment is a bi-weekly. Every 2 weeks you're gonna get paid. But in other countries, differently. Internal control of the payroll. Objective of the control of payroll is to safeguard company assets against unauthorized payment of payroll, to ensure the accuracy and reliability of the accounting record preparing of payroll. So in my experience for the last 25 years working in Canada, most of the payroll is outsourced to a company called ADP or Ceridian. That's basically what it is. Even the big companies are doing it like that because payroll is tedious. It's a lot of work, a lot of manual labor, administrative work. So they do it that way. So it's to save the cost and money doing the payroll. Payroll activities involve four functions. It should be assigned to different individuals and departments such as hiring employees, timekeeping, preparing for payroll, and paying for the payroll. Learning objective number 4. Prepare the current liability section of the balance sheet with what it is. Current balance sheet in terms of financial statement. Following liabilities are generally first category reported in the sections of the balance sheet. Each type of the current listed separately, generally listed on the order of liquidity, usually by maturity date, and also common to show bank loan, note payable, and account payable first, regardless of the size. So this is typical: bank loan, note payable, and account payable, regardless of the size. The term of the operating line of credit, note payable, and other are disclosed in the note. Then number 5, which is calculate mandatory payroll deduction in the CPV. Appendix number 10 here, CPV contribution calculated as percentage of earnings over set of minimum based on a basic assumption the maximum amount of earning, maximum period of earning, and is prorated per payday period. EI, which is employment insurance contribution calculated based on percentage of earning to maximum amount, insurable earnings, no basic yearly assumption, no prorated deducted from pay until maximum is reached. Personal income tax deductions based on a tax rate set by federal and provincial government. It has a progressive rate, higher percentage rates, the higher income level. So it ranges from 20 to 45%, depending on who is in the government. If it is liberal or NDP, they are more likely to have higher tax rate. If it is conservatives, they are most likely have a lower tax bracket rate. So it depends. So it's always vary by yearly. Okay, check with the CRA textbook and guidelines. Complicated calculation based on using deduction table, automated tools provided by CRA. So guys, the keep out. If you're living in Canada, you have to always check your CRA. CRA is the body that regulates the tax income. You have to make sure you file your income tax. Canada and US is the only country in the world, regardless wherever you are. If you're a Canadian citizen, like me, if I live somewhere hiding in Tibet, let's say Lhasa, or I'm hiding still living in Ghana or Zimbabwe, or I'm hiding in Amazon jungle, I still have to file my income tax every year. Why? If I don't do that, I'm going to lose my benefits. Okay? That's the key part. Make sure US is the same story. And this is basically closing our chapters. Make sure you understand this. This is owned by John Wally Plus. So this basically concludes this chapter. Hopefully I'll see you soon again. And it will be loaded in YouTube as well as in Edpuzzle. So you can use this for your practice session. Thank you. Bye-bye.